Hello, hello. If you have taken out, well, if you use Square, Vagaro, or any credit card processor for your services or your products, and you've taken out a loan or an advance from them, you may be expecting it to be treated like a traditional business loan where it's not taxable. But these loans and these advances are absolutely taxable and they are reported on your 1099K form. My name is Jennifer, and I am the founder and CEO of Hair CEO. We are a business advisory and an accounting firm helping self employed hair professionals and hair business owners run legitimate, profitable, and bankable businesses. And today is day 17 in this series called 2026 Tax Talk. And so let's dive in to how these loans are actually treated. Now, like I mentioned, you may be thinking that, it's a loan. It says it. You log into Square and your dashboard, it says Square loan. Now, traditional loans, when you get from a bank, those loans, that money is not taxable. But for Square and for all of these, credit card processors that allow you to take out money and they call it either a loan or sometimes I've seen it called an advance. I actually prefer the term advance because it's not as misleading as a loan. Because what these are actually future sales on your services or your products, and honestly, at a discounted rate. So the way this works is when you take out that loan, it's not, you know, a traditional kind of like car loan, or the best example is like a business loan. Like if you were to go to your bank and you were to, submit all the information to get a loan, then that money is not going to be taxable. Matter of fact, one of our business owners recently got funded about $70,000 in his bank account for his business loan. That's $70,000, not taxable. That's great, right? It's a debt. He has to pay it back, but it's not taxable. You, on the other hand, if you took out a loan, let's say you took out a loan for 70,000, like you took out a loan, but it's really an advance from Square, they're going to report all of it to the IRS on that 1099K form. And so, it's going to be really important that you understand that, because if you don't have that 1099, like you may not have treated that as like your income, because maybe you're just looking at sales. And if you've had other loans, you know that those loans weren't taxable and you may leave it off your tax return completely. Well, you don't want to do that, because if you leave off that 70,000 when the IRS already knows about it, you're definitely going to get a letter from the IRS. And that is like an open invitation for an audit, for them to dive into your books, because at that point they know like this person is probably not doing their taxes or their bookkeeping the way they're supposed to be doing. This is why it's so important to make sure that if you're doing, if you're running your business and this is your career, that this is going to be full time for you. You want to make sure you're working with an advisor or some type of accounting firm so that you don't get yourself into hot water or trouble. Now, let's talk a little bit about how you can be strategic when it comes to these loans, right? The first thing is, if you can, I always think it's better if you can go the more traditional route for loans. Yes, it's going to take more paperwork, but it's not going to be as expensive. So ask this question to yourself and tell me what the answer is. Would you give someone just a 15% or 20% discount on your services? Most of you don't even like giving discounts. Most of you say you don't even use the word discount. But that's essentially exactly what you're doing when you take out these Square loans or these advances from your credit card processors, because they are charging you for each future sale like that. So if you take out 20,000 and they're going to take, 5,000 as the fee, then essentially they're saying your $20,000 worth of services, we're getting it at a you're getting it. I'm getting it at a discounted rate of 15,000. And so, yes, you'll get that money up front, but it's all going to be taxable. So, one of the things that I see trip people up, I had a client working with us, and she actually took out a Square loan in December. Did not ask, they don't have to ask our permission when they work with us, but we certainly want them to come to us with any big financial decisions, and taking out a loan, pretty big decision. And I was like, oh my gosh, why did you take this out in December? Because in December, if you take out $20,000, you're going to be taxed on that 20,000. So you haven't even had the time to implement any strategies to bring in more money, because honestly, that's why you should be taking out any money at all. Really is for like income producing activities. That was my first choice. And so that put her in a position where she was going to be taxed on a lot more money because she didn't have time to spend it. So if you got approved for $70,000, and let's say you have plans on buying something, for 70,000. I don't know, you're going to invest in some marketing campaign that's going to cost $70,000. I'm not telling you to go do that, but if that were the case, then you could have both the income come in and the expense come in to offset it, right? But if you get the money December 29th, the chances of you spending that money immediately, slim to none. So now you're going to be taxed on all this income that you haven't even had time to spend. And so that's just income that you're going to be, responsible for paying the tax on. So you want to be careful about that. This is why it's so important. Again, make sure you are working with a tax professional. Make sure you're working with an accounting firm. Make sure you have some type of financial advisor. These are the things that we do at Hair CEO for our clients, because we only work with folks in the hair industry. So everything that we do is aligned with this industry. Square loans, huge in this industry of hair, right? Because it's so easy. And, hate to say it, but these tools, they take advantage of businesses that aren't doing things correctly. Of course, it's going to be easy to get a Square loan. It's going to cost you more money and it's taxable. But if you have your books in order, if you're showing income, if you're showing that you're consistent, working with a budget and showing that your business is actually making money, why not use that to your advantage and just get a business loan? And now it's not taxable. It's a debt. You're paying it back, but that's way better than getting a Square loan or some type of merchant advance. So that's what I wanted to talk about today. This was short and sweet. You just want to make sure that these advances, that you are recording them properly. Because even if you haven't received your 1099K, you want to make sure it's on there, because if there's any discrepancy, IRS will definitely get in contact with you, and the potential for an audit goes all the way up. Now, I am not giving you tax advice. This is for educational purposes. If you want advice for your unique situation, I'm going to leave the link in my bio, not my bio, in the description below, so that you can book a reservation. We're working with a limited number of self-employed hair professionals and hair business owners for the 2026 filing season. So you'll definitely want to make sure that you click the link and schedule your appointment sooner than later. All right. Well, I am Jen, and I help simplify profits and taxes for self-employed hair professionals and hair business owners. And I will see you tomorrow, and we're going to talk about shoebox receipts. All right. See you tomorrow.